Have you ever wondered how someone could achieve an unbelievable 66% annual return on their investments? Well, Jim Simmons just did that. But how did he do it? What if I told you he used complex mathematical algorithms combined with cutting-edge technology and a team of top-notch scientists to revolutionize the world of finance? But wait, there's more. Jim Simmons' strategies are not only effective but have also stood the test of time, generating consistent and impressive returns for over 30 years. In this video, we'll take you through Jim Simmons' revolutionary approach to investing. So, buckle up and get ready to discover the 7 strategies of Jim Simmons to achieve a massive return on your investment. Jim Simmons, the founder of Renaissance Technologies and its Medallion Fund, is not your typical investor. He's known as the Quant King, as he has revolutionized the hedge fund industry with his unique investment strategies. Back in the early 80s, the concept of quant trading was completely unheard of, but Renaissance was able to deliver massive returns, averaging 40% annual returns after fees between 1988 to 2018. On a gross basis, the fund was able to return an average of 66.1% before fees, making it one of the most successful hedge funds in history. But how was he able to achieve such remarkable returns? You'll find out as we will explore the 7 strategies that Jim Simmons employed. But right before we delve into that, let's put more perspective into why Jim Simmons is referred to as the Quant King. Jim Simmons pioneered quant trading and utilized advanced quantitative models to exploit market inefficiencies and generate substantial profits. His innovative strategies have had a massive impact on the equity trading industry, which has undergone a significant transformation in recent years. Nowadays, machine algorithms and historical data sets have replaced human perception, making algorithmic trading a crucial component of the US stock market. Thanks to Simmons' groundbreaking work, quant trading has become an integral part of the finance industry, cementing his status as a legendary hedge fund manager. So, what are Jim Simmons' strategies to earn remarkable returns annually? Strategy number 1. Find anomalies and profit. Jim Simmons' strategy of finding anomalies and profiting from them was a game changer in the world of trading.
But the real thing was to gather a tremendous amount of data, and we had to get it by hand in the early days. We went down to the Federal Reserve and copied interest rate.
By gathering a massive amount of data on everything, his team was able to backtrack it across history and search for consistent oddities. Once found, they would exploit these anomalies regardless of the reasons behind them by buying and selling stocks accordingly. For instance, if there was a significant increase in a stock's price leading into Christmas, Simmons would buy it, hold it, and sell it after Christmas. This strategy was applied across thousands of data sets, leading to tremendous profits. Simmons' data-driven approach proved to be a superior alternative to human intuition and guesswork. His systematic approach to anomaly trading further changed the way investors approach the stock market. Strategy 2. Short-term trend following. Simmons' second strategy was short-term trend following, which involved looking for patterns in the commodity market, such as those of copper, gold, silver, oil, corn, and wheat. He would zoom in on a smaller time frame and notice if the commodity was trending up or down. The reasons for the trend did not matter to him. He only cared about how he could profit from it. If the commodity was trending upwards, he would buy it, and if it was trending downwards, he would short it. This strategy worked well for him in the early days of trading, but it became more obsolete as others caught on. Simmons needed to upgrade his strategy to continue making money in the market, or risk falling behind.
And in fact, years ago, such a system would work. Not beautifully, but it would work. So you'd make money, you'd lose money, you'd make money, but this is a year's worth of days. And
Strategy number 3. Reversion predicting signals. Reversion predicting signals is a strategy used by Renaissance Technologies, a hedge fund led by mathematician James Simmons. The fund uses complex algorithms to analyze vast amounts of data on stocks, identifying patterns and irregularities in market behavior that can be exploited for profit. One example is the déjà vu reversion, where a stock price reverts back to a particular metric, such as the average or tangible book value. By using this strategy, Renaissance flagship fund Medallion has consistently averaged a 66% return, making it one of the most successful hedge funds in history. This strategy requires a deep understanding of data analysis and machine learning, and it shows how advanced technology can give traders an edge in the market. Strategy number 4. Employ high IQ doctors, not investors. Jim Simmons, the founder of the Medallion Fund, employed his unique strategy of hiring high IQ individuals such as doctors, mathematicians, and physicists, instead of traditional investors with finance backgrounds. By bringing together a team of geniuses with exceptional problem-solving skills, he aimed to create complex models that could analyze vast amounts of data, find patterns, and make profitable trades. To ensure that his team was invested in the company's success, he hired them as partners rather than employees. This incentivized them to work hard and make as much money as possible in the market. Simmons' strategy of hiring smart individuals with diverse backgrounds and incentivizing them to succeed was the secret recipe beyond the Medallion Fund's success. Strategy 5. Use other people's money to make trades. Simmons' Medallion Fund used a secret strategy to maximize profits using other people's money. They borrowed money to trade in the market countless times per day, leveraging signals based on the short-term patterns identified by their team of scientists. This allowed them to make more trades and exponentially increase returns. Reports say they borrowed about 17% for every $1 invested, putting their returns on steroids. This strategy worked because it allowed them to use a lot more money than they actually had and quickly made trades and profits. Borrowing money helped change modest returns into something that wasn't modest at all, making their returns truly impressive. Now, I'd like you to pay close attention to the next 2 strategies for a few more minutes, as these few minutes are worth a whole year of insight. So, strategy number 6, take out emotion, just look at the data. Now, Jim Simmons' Medallion Fund strategy was to take out emotion and just look at the data. They hired PhDs with backgrounds in math, physics, astronomy, and statistics, who focused on the numbers. They didn't care about market emotions, investors' opinions, or brand strength. They saw the market as a science experiment, trying different variables until they found profitable trading algorithms. Their data-driven approach removed the subjective opinions and emotions that often influence investors' decisions. This strategy helped the Medallion Fund achieve massive returns, making it one of the most successful hedge funds ever. Strategy number 7, let machine learning and AI do the testing. Jim Simmons was a pioneer in using machine learning in trading. Machines can analyze thousands of moves and predict if a move is beneficial, making them great for finding profitable trades. The beauty of machines is that they can test almost infinite data in the time that it takes for a human to test one thing. Simmons incorporated machines into his trading strategy, giving him an edge over his competition. These 7 strategies made Simmons the greatest investor on Wall Street and the most successful hedge fund manager of all time. As a high IQ individual, consider trading and learn from these strategies to become the next Jim Simmons. Thanks for watching the video, and see you in the next one.